You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Thank you, Vik Malhotra, for joining us in the Blockchain CEO series. Today we're going to take a different tact for my audience. I think we're going through a very challenging period of time, and having the opportunity to speak to a senior partner at McKinsey about management, I think is good for my listeners, and I think it's really important. Vikram, thank you very much for joining us today. I look forward to our honest dialogue, our discussion about your book, and hopefully we can solve some wonderful problems for a lot of folks out there. So for those who don't know Vikram, he is a senior partner at McKinsey and Company. Also, and he's been there since 1986. By the way, that's a long tenure, I'm sure. He was also a director of the board and also McKinsey Managing Partner of Americas. He co-authored with Caroline Dewar and Scott Keller this wonderful book that we'll be talking about, the CEO Excellence, and it talks about the 6 mindsets that distinguish the best leaders from the rest. And I think most people can see the diagram below. So a couple of KPIs that I was most impressed with, and then we'll bring Vikram on. Thanks for your patience, Vikram.
Of course.
Your book highlights that $5 trillion of added value was created through the top 200 CEOs. That's the equivalent of the GDP of Japan. I mean, that's a huge number as far as I'm concerned. Now, our audience is made up of ETF nerds, portfolio managers, and financial advisors. And some of them will also be surprised, I think, by the fact that alpha, 2.8 times alpha, was created by some of these managements in aggregate over the S&P 500. So put differently, that's $10,000 of value over a decade versus $1,600. I read that, Vikram, that KPI, and I was shocked. So starting right into it, if you would, we've got this diagram up on the screen. Would love for everybody to hear a little bit more about how you came together to write the book, and of course the diagram as well.
Of course. So the bottom line, Dan, is that great CEOs matter. Great leadership matters. It's not just CEOs. Great leadership matters. It makes a huge difference. We have lots of analytics, and you've cited a couple of examples. The other one that's one of my favorites is that, 40 to 45% of performance of a company can actually be driven literally off the CEO, their leadership style, how they bring the team along, all of that stuff that goes with it. So bottom line is leadership matters, great CEOs matter. The way we came to the book was we said, okay, we've got all this research. You've cited a few of the facts, and we said, we'd like to interview some really great CEOs as part of this. So we kind of stepped back and said, if you look at the world over the last 25 years, there have been 3,500 CEOs. We said, let's get people who've been enrolled for 6 years or more, and let's get people who have delivered, for the most part, not always, 20% or more, delivered shareholder returns and been in the top quintile in their sector. So obviously very different if you're in the tech sector versus the financial services sector versus the healthcare sector. But in your sector, have you been top quintile in terms of shareholder return? This narrowed the group from 3,500 to 200. And we went out to 75 of that 200, and we were very fortunate. 67 of them said, yes, we'd like to be interviewed. So we interviewed 67 of them through the pandemic, mostly on Zoom, 1 or 2 in person. And we discovered a bunch of interesting things. The first is, as we defined the responsibilities of CEOs, and you see the 6 in the middle here, what do CEOs do? They set the direction, they align the organization, They mobilize through leaders, go up to the top right, they engage the board, they connect with stakeholders, they manage their own personal effectiveness as a leader. One of the first insights really was that in these 6 responsibilities, which are not rocket science, we could have come up with these without the interviews. But the first insight was great CEOs do all 6 of these things really well all of the time. So I'd gone in with a bit of a hypothesis that there'd be some CEOs who were great at setting the direction, but perhaps less good at aligning the organization, or they'd be great at mobilizing through leaders, but perhaps not quite as visionary as others might be, but not true. They do all 6 of these things really well all of the time. The second interesting insight was every one of these CEOs, while being great risk managers, had audacious vision. And I'll be happy to give you some great examples of audacious vision. Their audacious vision, but they also realized the importance of being an integrator. Satya Nadella from Microsoft, in his interview with us, said, the issue is it's an information asymmetry problem. No matter how good your organization is, you see more than everyone who reports to you, and you see more than all the people on the board that you report to. So you got to have both audacious vision and you got to have great integration skills. And then the third insight, which is what this book is really all about, is against each one of these responsibilities in the middle, you see off to the sides in light blue, a mindset emerged. So the mindset against set the direction was a mindset of be bold. In fact, a number of these great CEOs said to us, there's one message you want to get out there is, if you inherit a company and it's going just fine, if you stay on that path, about 3 years' time, it'll catch up to you. If you're incremental, it'll catch up to you in a year. So you've got to be visionary and you've got to be bold. And so there's that mindset of be bold. Similarly, if I go down 3 down on the left, or if you're mobilizing through leaders, the mindset is solve for the team psychology. How do you really bring this team together and make them work well? And, you kind of see the other mindsets in there. And I'm happy to go into examples and give you vignettes in each of those, but you direct me, Dan, as to whether you'd like me to dive deep in any one of these or whether you'd like to turn some other questions. But the key here is these 6 mindsets are very, very different than what you encounter in most CEOs. They don't often have these 6 mindsets. They certainly don't have these 6 mindsets working in concert with each other.
So let's start out broad and then we'll get into narrow stuff, right? We're experiencing conditions on a macro level, economic conditions, like we haven't seen maybe in a decade or 2, right? What are you thinking is going on in the way of the CEO suites these days, right? In the context of what your diagram is showing.
Yeah, I think there are 2 things happening, or maybe 3 things happening in concert. The first is great CEOs, in my mind, remain bold in times like this, right? They view times like this as a real opportunity. By the way, as you'll see there, that first bullet point under Be Bold, which says vision, reframe the game. Many of these folks have already established their vision. They have a true North Star around where they want the institution to go in the next 5 to 8 years. It's kind of that time frame. And that doesn't change when the macro context shifts, because they know the world will also, come back to some normality at some point. And so they need to react in the moment. Yes, they got to deal with quarterly earnings. Yes, they got to do all of that. But they don't lose sight of their North Star. And so to the extent that they need to be bold in this time frame, whether it's product strategies, whether it's customer segment strategies, whether it's what they do in M&A, but most importantly, now's the time to double down on your resource allocation bets. So capital dollars, expense dollars, talent, is that really going against where your big opportunities and big priorities are? So number one thing they do is they remain bold, right? The second thing that they do is, I noted that these great CEOs are bold, but they're also amazing risk managers. So trust me, they've already planned these scenarios that you're seeing today. They may not have planned for Russian invasion of Ukraine and war in Ukraine, but they certainly planned for inflation the way we're seeing it, oil prices the way we're seeing it, all of that stuff, and a recessionary environment. So they've got the scenarios planned out and they've got their playbook, right? And the third thing that therefore then happens is they bring that magic together. How am I going to remain bold and how am I going to balance those risks? And what are the moves that I'm going to make to deal with that, right? Some of it will be what we might naturally see in an environment like this. There will be the productivity moves that will kick in, undoubtedly. But I think much more interestingly is I think what you'll see between, and 2023 won't be a great year, I don't think, but I think what you'll see between the rest of 22 and 23 is, these great CEOs really pushing hard on some interesting new opportunities, growth areas, M&A opportunities, and the like. That's what they do in moments like this.
So Adobe is listed as one of those companies in your book, and they recently made a very pivotal acquisition. The CEO did, right?
Mm-hmm.
And candidly, I think there was some criticism of him for it, in that he paid a lot of money for the company that he bought, but his long-term vision, as an example, is that it's really going to be a bold move. $20 billion to me is a lot of money. Can you speak a little bit about that situation specifically?
I don't know much about the deal you're referring to, Dan, but here's what I do know about Shantanu Narayanan and Adobe. Shantanu took on Adobe, I don't know, 6 or 7 years ago at this point. Its market cap when he took it on was $20 billion. He completely reframed the game in terms of its vision and what it wanted to do in the field it was in and the like, right? So if you go back somewhere in the book, we've kind of contrasted the old Adobe versus the new vision that Shantanu put in place. Okay, fast forward, and I know tech stocks went up a lot, but they've also come down a lot. It's a $250 billion market cap company, right? It's a 10x shift between the market cap he took on and where it is today, right? I think he's earned the right. I don't know the specifics of the deal you're talking about, but I think he's on the right. And there are a couple of interesting things about Adobe, about Shantanu. I shouldn't talk about Adobe. I don't know much about them, but I do know this from my conversation with Shantanu. Number one, he's always remained true to the North Star of his vision, right? Where do they want the company to go? And to that end, he is less worked up. And by the way, in my view, most great CEOs are less worked up around quarterly earnings versus what I believe I need to do to get to the end goal. That's not to say they don't worry about quarterly earnings, don't look to deliver against it, but that is not their driving motivation. Their driving motivation is, where am I headed, right? That's the first thing. The second is with Adobe, as is true of others, they tend to kind of focus M&A in programmatic ways. They will typically do 5%, 8% of the company market cap wise in M&A every year, right? And then they'll do that for 5 years in a row, and suddenly 40% or 50% of the company is different, right? But they tend not to do big bang M&A, and 20 billion may seem a lot, but in the it's less than 10% market cap of the company. So in that context, it's very much part of a programmatic M&A play. And then the third is, one of the great defining features of Shantanu is every one of these great CEOs has a process that they love. And Shantanu in particular has a great bottoms-up innovation process in the company, which surfaces hundreds of ideas that get vetted and then get used in appropriate ways. And I'm sure, without knowing the details of this acquisition, that innovation agenda will play into the acquisition as well.
Interesting. Yeah. So let's talk a little bit about some of the companies that weren't listed in your book. And maybe I missed it, but I didn't see Amazon and I didn't see Apple. How is that possible? It's
very straightforward. Both of them, as you recall, I said 3,500 companies that cut down to 200. Both of them were part of the 200, right? We made a very explicit decision with Jeff Bezos and Amazon that this was going to be a book about people who ran companies that were kind of, if you like, up and running. And our general view was that there's a great book to be written on founder-led businesses. And we absolutely hugely respect what Jeff's done. And he absolutely qualifies to be interviewed and be part of this book. But we made a very explicit decision. And by the way, out of that 300, 200, there were about 30 founders, founder-led. I mean, Elon Musk would make the cut too, right? So we can argue whether Elon, that's played out enough yet or not. But we made an explicit decision to say, there's a founder-led book to write. Let's write that separately, right? This is about CEOs who've taken on either well-running companies or not so well-running companies and then done extraordinary things, right? Now, Tim Cook and Apple absolutely also qualified for this book. And I will say of the 75 people that I reached out to, he was in the 8 who didn't either respond or we couldn't get an interview with. But if we had gotten one, he would have been featured. He as the CEO would have been featured in this book.
Yeah, it's interesting. I've been very surprised as a portfolio manager, and this is a different question, but it does integrate with your mindset. Some companies don't respond to our inquiries, and maybe they don't know who we are, right? But your book makes a very explicit point that time is spent with shareholders who own your stock, not because you're going to be thinking about the short term, but they are also speaking to shareholders on a regular basis. What insights do you find that a lot of the CEOs really incorporated in their mindset?
Yeah. So look, I would say that the CEOs were a little different on this. Our general conclusion is that great CEOs are spending a lot of time connecting with stakeholders, and whether that's investors or analysts, trade unions, regulators, you name it, right? I would say we did err in the book saying they connect a lot with investors. There was a sizable minority who would say, you know what, the investors are who they are. I got to get on with life. But in general, your point is right, which is they do care about hearing from investors. They care about hearing from investors for 3 reasons, right? Reason number 1 is they are, this is the basic reason, right? We want to hear what people in our stock are doing, are thinking, right? Number 2 is they want to hear from investors because many of them have come to believe that I want to understand the type of investors who are in my stock. And then over time, I actually want to work really hard on shifting who owns my stock so that given my vision, given our direction, we can actually have people in the stock who believe in the long-term vision. Right now, we're only going to do this at the edges in a world where, lots of big companies are, in ETFs and mutual funds and the like. There's only so much you're going to do. But to the extent that they can kind of shift the composition of their shareholders, there are some who believe that's an important piece of what they've got to do. And then the third reason is, in being bold around setting the direction, many of these great CEOs, actually one of the things they love to do is an activist teardown of their company. If I was an activist coming to target this company, what would I do, right? Or if I were a private equity company and I own this company, how would I think about it differently in terms of the levers? It's part of this, act like an outsider, right? And they kind of do that. And they actually believe investors will help them continue to refine their thinking around, if I were doing a teardown, if I were doing a very different look at this company, like a PE firm might I think differently about the boldness that I'm displaying? So those are the 2 or 3 reasons that they love the conversations with the investor.
I was surprised also coming back to companies that were not included. That in the pharmaceutical industry, I was surprised by that Johnson & Johnson wasn't listed. Can you speak to Johnson & Johnson, why that wasn't listed, or how the pharmaceutical industry fit in with your book?
Well, certainly, if you look at, I can't speak to the specifics of J&J, but it is possible. I remember we did this analysis of who's going to be in and out in as of the end of 2019. Now, I can't tell you if in that period, if we looked at, remember, we're not looking at the company, we're looking at the individual, right?
Yeah.
So I can't tell you whether Alex Gorski had been in place for 6 years, right? Which would be one qualifying thing. If he'd been enrolled for 5 years, that would eliminate that. Or if in his tenure, J&J had been a top quintile performer. One of those two clearly didn't work because they didn't make our list. But that's neither here nor there. I'm not. And by the way, it shouldn't at all suggest they're not a great company. By the way, I think deeply and enormously highly of them. But I just don't know if one of those two criteria they didn't meet. So I can't again speak to the specifics, but that's the reason they wouldn't be in. There were certainly healthcare and pharmaceutical companies in our group of 200. One of my favorite ones in the book is Novo Nordisk, and the CEO there, Lars Sørensen, who just did an amazing job taking a company. Talk about being bold and visionary, taking a company where, which is performing just fine, and, sees this little glimmer of hope around their capability in biologics and turns it into the diabetes leader that it is today. Quite a remarkable story, actually.
Vikram, literally back in 1987, I wrote a memo on the company for Charlie Allen, who was, very early when it came to investing in pharmaceuticals and biotechs. And now that stock's done extremely well and the company's done very well. So switching gears a bit, when COVID hit, all of a sudden a lot of folks went to virtual, right? Because they had to. Now I know that you wrote the book dated 2019, right? How do you think that's impacted the communications between employees and leadership at this point?
Yeah, look, I actually have spent a lot of time talking to CEOs beyond the book, and this is almost return to work, and what's the new normal is clearly a hot topic, right? It's clearly a hot topic, and there are some CEOs out there who are clearly pushing for we got to go back to the way it was because you need that for mentorship and apprenticeship and the like, and the other extreme is a group which going to go. Let's just do, in a moment where employee attrition is high, let's kind of go with the flow and go with whatever the employees want at the moment. And of course, the truth lies somewhere in between. I think the very best CEOs today are really looking at this and saying, there is a real opportunity in here. And the opportunity is a little less about who's in the office and who's not in the office. The opportunity is really around a new, more productive way of working, which also meets the ability to raise employee satisfaction. So what do I mean by this? If you actually look at what happened in the pandemic, we surveyed a lot of people right in the heat of the moment, kind of think April 2020, May 2020, July 2020, September 2020. What do you learn? The people who were the happiest in that period of time were the senior team, and then people who were 2, 3, 4 levels down in the organization, maybe even 3, 4, 5 levels down in the organization. And why were they the happiest? Because the pandemic had given permission for the leadership team not to worry about hierarchy, not to worry about that tier of middle management that was in essence clogging up most companies and stopping them from working effectively. And so suddenly you didn't have big meetings for 2 hours, you had shorter meetings for 30 minutes. Suddenly you had the head of a business unit or the head of technology digging 3 levels down the organization saying, yeah, there's Joe, there's Dan, there's Jane. Let me go directly to them and get what needs to get done. And suddenly agility in a very different way came to be born, right? And so today what's happening is that the best leaders here are sort of thinking about, as we think about the new norms of how we work as an organization, how do I do 2 things? One, just work in, not 3 things actually. One, how do we work in many more productive ways? 2, how are we more agile? And 3, in that context, how can I ensure that my employees are getting sufficient mentorship and apprenticeship and touch points? Because, sitting in your room at home is ultimately not going to be the easy, not going to be human, right? And that's just leading to different norms, right? So, whether it's 3 days back, 4 days back, whether it's back a week, off a week, whatever it is, new norms are emerging that are very specific to individual companies. And I think it's pretty exciting. And I think for those who get it right, I think the upside is enormous.
We've been virtual as an organization since our inception, really, and we've grown from 8 to 42 employees in the last 2 years, and we do Zoom calls on a regular basis, and it seems to work for us in our business model. But I get the challenges, and I'm glad you see it as an opportunity. Speaking of opportunities, as my last question, I have to ask you a little bit about blockchain.
Mm-hmm.
I don't know if you're a fan or not a fan. I am not talking crypto. I'm talking blockchain
I
specifically.
understand. Yep.
Yeah. And two specific companies, if you could comment on, would be great, whether it's about blockchain or just generally, is DBS Group and MasterCard.
Mhm.
I don't expect that you're going to speak about their blockchain efforts specifically, but if you could speak about those two companies in general, how they're making decisions, that would be wonderful.
Yeah, absolutely. Look, by the way, I'm a big fan of blockchain. I think the technology is awesome, and we'll continue to refine and shift and change it over time. And so, it's a very important part of our future, right? And both from a security point of view, speed point of view, or you name it, it will and is already adding a lot. Let me start with DBS. I'm a big fan of Piyush Gupta and DBS, and just remember where DBS was, which is the single worst bank in Singapore. We're not even talking, in Singapore, in one relatively small country, it was the single worst bank, right? And Piyush Gupta actually kind of took it on the first leg of its journey, where he said, I want to become the bank of choice in Asia, which he got it to. But he only went to that one interim step because his organization wasn't ready for what then turned out to be his next real bold vision. So back to my little chart here, top left, if you're looking at it, talk about vision, reframe the game. What he always wanted to do, which is what he eventually put out as his vision, 6 words or 5 words or 8 words, whatever it is. But just think about the audacious nature of this vision. I want to be that technology company that makes banking joyful. I want to be the technology company that makes banking joyful. I mean, they were fintech. He made that statement in 2012. He wanted to make it in 2009. He ended up making it in 2012 or 2013. And think about how audacious that was. He was being a fintech before they were fintechs, right? And he completely reoriented his bank around it. In terms of the use of technology, the use of agile, the use of all of that stuff to build a really sharp, nimble bank. And he sent a lot of cultural messages into the organization. I mean, one of my favorite little stories is they were fined by the Singapore authorities for an ATM mishap. And what happened was one of the programmers had essentially said, our ATMs are not reacting and dealing quickly enough, and let me make this little twist to it, and that'll help shave a few seconds off, right? And it turned out it was a bad decision, and it ended up costing the bank $6 million in losses, and then there were fines involved, and whatever, right? All good. But Piyush actually said, you know what, I want to celebrate that, because that is exactly the kind of innovation and initiative taking that I want to celebrate, right? So I think what you got there is a bank that is hugely tech-based and deeply innovative, and always looking to empower its employees to kind of continue to push the envelope within guardrails and within other things that they do. So terrific institution, right? I feel the same way about MasterCard. I think MasterCard, Ajay Banga's vision, and he's the featured CEO in this, he had a 2-word vision: kill cash, right? We had all this energy at MasterCard that was all about how do we maintain our big credit card margins and keep going after that. And he was like, well, there's all this opportunity to go after cash. And I remember this is 2011, not 2022. And, we've done a good job at killing cash. But he said, let's kill cash. And, the energy and the innovation that unleashed, the new product development, the focus on new technologies that were going to go after cash was quite remarkable. And I'm sure blockchain is playing an important role in both of these institutions, both remarkable institutions which continue to grow and develop.
So Vikram, I didn't know what your answer was going to be on the blockchain. So now I'm going to ask one more question. I love your answer, by the way, on those two. Do you have an opinion on what industries are going to be most affected by the blockchain, industry wide? Not financial services, by the way. That's too easy.
and I'm gonna disappoint you, Dan, which is I read Matt Higginson was here, who's our guru on blockchain, and he would give you chapter and verse on that answer. I would be making stuff up, so I'm going to plead the fifth on this one. Mm-hmm.
I respect that. Stick with what you know. I appreciate it. Thank you so much for spending the time with me on our Blockchain CEO series. I love your book. Again, everybody should get it. I learned a lot, Vikram, from reading it twice, by the way. And be safe. Have a great day.
Indeed. Be well. Bye-bye.
Thank you.